Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Thursday, July 30th. Firstly to gold futures, and here we see a change of trend today, a candle making a lower high and a lower low, and importantly being rejected from the resistance at the Tenkan-sen indicator. Formation of a black body suggests that there's been some momentum to the downside, so the sellers may be starting to build some momentum, as we saw here at the initiation of this new first time frame downtrend. But the sellers are going to have to be strong enough to breach the 1084 and 1075 and 1072 levels of very strong support that's come into this market over the last week and a half. The market tested down below 1084.8 today and was rejected, failing to close down below there. At the moment we've opened down below the Tenkan-sen, and once again we could see some rejection coming in there. If we see a bullish breakout up above the Tenkan-sen, and if the market can clear the areas just above the shadows of these candles up about 1108, if we see bullish activity up above there, we could easily see the market testing up to 1124, but we're likely to find that resistance up to that area too much if the market does rally. The support here, as I've mentioned, does extend down to 1072. If we can breach down through there in a bearish manner, we could easily see gold futures trading down to 1044. Just taking a look here at the bands with gold futures, and here we see continued activity down below the lower band, giving us a strong bearish market in the medium-term time frame. The lower band once again for the second consecutive trading day holding as resistance, being rejected from there. Today 1092 is the area that we'll be watching at the lower band to hold as continued strong resistance. Moving next to NYMEX oil, and here we see formation of a small black body candle. Sellers taking control on this candle. The previous trend was to the upside with the white body candle, and today's candle has seen the market fail to take out the high of yesterday's trading. The lack of commitment to test up through that level, and the reduction in the size of the range compared to the range of recent candles, and importantly the previous day, suggests that the buyers are no longer as eager as they were for that previous day's trading. What we also saw today was the Tenkan-sen holding as strong resistance, and quite often when we have strong downside momentum in a market, and we can see that strong momentum in the short-term time frame by the angle of the Tenkan-sen indicator, when we have that resistance, when we tend to retrace back to the Tenkan-sen, it holds as very strong resistance, and we are seeing rejection from there today. There is an opportunity for the market to change the trend back to the downside. Any strong selling could easily see NYMEX oil testing down to 46.72. Once again, watching the Tenkan-sen roughly about the $49 level to hold as resistance, and if we breach up through there, 49.90 and the $50 level may hold as even stronger resistance, being a round number. Next to wheat futures, and from the prior day's trading we saw that strong bearish breakout down below the round number $500 level, failing to breach down through 496.50 in a significant manner, and today we've seen a continuation of the trend to the downside, but a very small body candle at the end of this significant first time frame downtrend. This suggests that the downside momentum that we saw previously is no longer in the market, but we have seen the sellers continue with control of the market. We're closing down between the midpoint level and the low. Also today the market rallied to the $500 level, rejected from there, closing below there, but also importantly rallying into the cloud to find strong resistance right at the top of the cloud, and closing once again down outside of the cloud. The trading outside of the cloud suggests that we now have a bearish market in the longer term time frame, but if the buyers are strong enough and if they can breach 500 and trade up through the cloud, we could see something of a retracement of that very important first time frame downtrend. We do have a bearish market in all three time frames now, not quite supported by the Chica span, but it certainly may be very soon. Not trading down below that price action just there, and just trading below it for the current candle. So I'd like to see another close down below there to confirm. Next to corn futures, and here we see a continuation of the trend to the downside following the very large black body candle. Today, however, we've seen the shift in the colour of the body of the candle from black to white, so a shift in net momentum from the sellers to the buyers, suggesting very good potential for a change of trend. What we've also seen here was the sellers, who had very strong control from the previous day, lose that control to the buyers, and the buyers have taken strong control at the end of trading by closing up at the high. This is a potential Japanese candlestick reversal pattern. It's a potential harami pattern, and the harami is always, when we have a downtrend in place, we always need a trend to have a reversal. Downtrend in place, large black body, a smaller white body engulfed within the body of the previous, and we'll be looking for confirmation of that change of trend to the upside with a candle to make a higher high and a higher low. Now, the buyers are going to have to be strong enough to breach the 385 level of previous support and resistance, but if they can trade up through there, potential for them to initially trade to roughly about 390 and then up to the 393.75 level of previous resistance. Just looking at the bands here with corn futures, and very strong trading activity below the lower band suggests we have a very strong negative bias in the medium-term time frame. Any rally is likely to find strong resistance at the bottom band at 398.52, very close to that round number 400. Next to the US 30-year bond futures, and here we've seen buying coming into the market again today. That follows the bearish bracket down below 154.27. The market's selling off early in the session and testing down to the 153.11 area of support. Finding support there was the Tenkan-sen trading in that area, strengthening the amount of support, and the buyers have come back into this market very strongly off that area. Closing with control, formation of a white body candle, good solid upside momentum, and a breach above 154.27 previous support and resistance, and this suggests that we certainly should see a test to the 155.27 level of resistance, and perhaps even beyond. Up above there we have strong resistance at the top of the cloud at 155.27. Now, just looking at the bands here with the US 30-year bond futures, and here we've seen strong bullish activity out through the top of the upper band. Good strong follow through, a breach up through that swing high to confirm, the market retracing back to that upper band and bouncing off there in a strong way today. This suggests that we could see the market take out that swing high and then trade significantly to high levels. This suggests that we have a very strong uptrend in place in the medium term time frame, and really the key will be the breach of this 155.27 level that's been tested on a few occasions in the recent past, back in May. Moving next to the hourly futures with the S&P 500, and here we see the transition away from that strong downtrending phase, trading below the Ichimoku cloud, which gave us that longer term bias, and here we now have a bullish bias in the market, trading up above the Ichimoku cloud for that longer term time frame on the hourly charts. For the current trading session, we saw the market open around the middle pivot point level, rallying to find some resistance around the Tenkan-sen, breaking out above the Tenkan-sen with a lack of follow through, then selling off down through those indicators that we'd expect to hold as some support, but finding strong support at the first pivot point support level. The market then rallied off that area and closed between the middle pivot point level and the first resistance level. For today's trading, we've seen the market open above the middle pivot point level, expecting to find very strong support around there, basically about 20.98, and we have the Ichimoku cloud that extends all the way down through very close to the second pivot point support level at 20.81. Any rally off any of this support or at the beginning of the session is likely to find some strong resistance at the first pivot point resistance level at 21.08. Just looking at the bands here with the hourly chart, and we see continued bullish activity up above the upper band. The bullish breakout from at the end of trading found some very strong resistance around that 21.04 level. If the buyers are strong enough and if they can breach up through that area and continue trading up above the upper band, we could see continued upside activity. At the moment, the market is open to within the bands, looking to the middle of the bands at 20.99, around that 2100 round number, to hold a strong support. If we do test significantly lower, the lower band at 20.95